The earnings season rolls on. We'll talk more about that.
Yes.
We've got a lot to say about that. You're watching some earnings across the screen as we speak. DuPont, Dow DuPont, Aetna, Cigna, all reporting before the open already. This has Tesla released its second quarter earnings yesterday. The company reported a loss of $3.06 a share on revenue of $4 billion. But Tesla's cash burn rate slowed, and the stock is surging ahead of the open. That tells you what's really important to investors, and that is the cash burn. Tesla CEO Elon Musk even apologized to analysts during a conference call for impolite comments he made during the prior earnings call, which, of course, we've spoken about. Joining us right now is Brian White. He is Global Head of Internet and Software Equity Research for Monness, Crespi, Hart & Company. And, Brian, it's good to see you. Thanks so much for joining us.
Good morning, Maria.
We want to talk about the overall sector. I know you cover Apple, so I want to ask you about the $1 trillion that we're waiting on. Yep. But first, let's talk about Tesla and the results. Dagan.
No, I was just doing woohoo for the $1 trillion.
You want to win that bet to Kevin Kelly.
We root for American success. We do on the Fox Business Network. I just really quickly, before we move on to Tesla, $207 a share, a little bit higher than that. That's what we have to watch for today. That $1 trillion market cap, it did change because of the outstanding share count.
Yeah, and the stock is doing really well this morning on Tesla, so it's 8%. Let's talk Apple and what's happening within tech right now. Apple shares are down this morning, but it continues to see real growth.
It was an exceptional quarter this week. And so what you're really seeing is all the pieces to Planet Apple really starting to come together. Not just from, iPhone and the traditional products. iPad actually did very well, but the services business grew 31% in the quarter. So, that's Apple Music, that's the App Store, that's iCloud service. So, a lot of people look at Apple and, the smartphone market isn't going to do that great. It's much more than just the smartphone story now, and you're starting to see all the pieces start to come together. So really a phenomenal result. We put a price target at $275 on Apple.
Well, it's interesting that you say that because I was talking with Dan Niles yesterday about this, and he was mentioning, and he's going to join us later on in the show this morning, and he was saying basically Apple is having to pay out like things to, fees like to Google and to others. And so he was relying on that, on their software, the phone, saying that it feels awfully like the PC business because there are so many phones. Where do you get the market to actually sell more $1,000 phones?
Well, the beauty of Apple, unlike a lot of tech companies, their market share is tiny. 15% market share in smartphones. And so as the global middle class, you're not necessarily seeing it in the U.S. because 80% of the middle class is growing outside of the U.S. And so you're going to add, you add $1.5 billion every decade. That's where Apple's going to tap into, the global middle class.
Yeah, sure. That makes sense, Dave.
And we can talk about Tesla, too. The big headline, and you already hit it, Maria, is that Tesla was burning less cash than expected. Tesla was able to produce it's saying that a continued production rate of more than 5,000 Model 3s per week during the third quarter can make the automaker cash flow positive and profitable. So the stock was down. Look at it run this morning. It is fired up. It's up 8% in pre-market trading. Before the earnings report, the stock was down 3%. It finished the second quarter with $2.2 billion worth of cash, and its negative free cash flow was lower than what analysts were expecting. So, again, people were very concerned about the cash burn rate, and this at least soothes investor concerns for the time being.
Will you go through the actual environment today for tech and tell us where you see the winners and the losers? I mean, obviously Tesla is an auto company, but really a technology company as well. But when you're looking at things like Facebook and Twitter and Apple and what has taken place in the last year.
I mean, it's still a very exciting area. So we had kind of a rough, I would say, earnings season. Apple did phenomenally well, but other companies not so hot. I still think, software is eating the world, and that's why you're seeing Apple move more to software, and they've always had a good presence there. But, Facebook on this sell-off we like. I think it's very attractive. 2.5 billion people use one of the Facebook apps. It's the most profitable company in the world.
And now you see the news today, what they're doing with WhatsApp, trying to monetize that.
I think, look, they did a reset. Stock is very cheap for its margins and growth rate. Also Alphabet, Google. I think, there's a lot going on there with the Google Cloud and with their search business. There's a news story potentially they could get back into China, which we highlighted a couple months ago. So
but this is an important story because today we're talking trade meeting technology. Right. The U.S. is threatening to more than double the proposed tariffs against China, $200 billion worth of Chinese goods. But Google wants to prepare this censored search engine that could operate in China to placate the Chinese government. Is that profit? Do you think that would be profitable for them? Do they just need a foothold in China so much?
I think it would be helpful.
Yeah.
There's 1.4 billion
big portion
people.
Of the population, sure.
It's a big portion of the population. To be honest, China's government probably wants it too. You know, think about China doesn't have the search capability, you know, that the rest of the world has because they don't have Google. And so I think they'd like to have.
Is that deliberate, though?
Yeah, I mean, you know, Google bailed out because they were being censored in, I think it was 2010. But I think, you know, when you operate in different countries, you operate by their laws. And I think Google has grown up now and looked at this and said, hey, you know, if we want to be there, we're going to play by the rules. But I think at that point, back then, I think it was a shock to have the government censor them.
James?
Okay, speaking of censorship, here in the U.S., a lot of people on the right half of the political spectrum feel like Twitter and Facebook is, whether you call it shadow banning or suppressing certain viewpoints. Is this something that is recognized as a business issue, or is this seen at these companies now as kind of a PR political thing to manage?
Well, I think I know that view's out there. I'm not sure it's really true. I think, you know, Mark Zuckerberg has kind of bent over backwards to make sure that all views are welcome. I really do. And so, you know, it's not just...
But Twitter less so?
You know, Twitter, I would say Twitter's... I cover Facebook, so I can give you the Facebook angle.
Yeah.
And that's my view. They have actually bent over backwards. Even, you know, internally, probably there's a lot of liberals at Facebook, and probably they didn't want those views, right? They maybe didn't want to, but I think Mark has done a good job.
I mean, what was the recent situation with Google where you put in GOP California and the search results came back as Nazism?
Well,
I mean, they said it was the algorithm, but somebody's programming the algorithm, right?
I would say across the Silicon Valley landscape, there have been a bunch of these stories, and when they happen, the answer typically is, oh, algorithm got to tweak that, but there's a question of, do the humans who write the algorithms have a bias?
Absolutely, there can be some people. I feel that Mark Zuckerberg has come down really hard and said, we want all views open. That's my view.
All right, so you would buy Apple here?
Oh, absolutely. Yeah, we have a $275 target, so I think there's lots of upside to this story. And we call it the most underappreciated stock in the world. It's 13 times X cash. It's very cheap.
Versus?
Well, you know, you look at, I think Facebook is super cheap, but it's 20 times. I think Google's super cheap for what it's offering. It's 26 times. If you look at sugar water companies, right, think of the soda companies, detergent company, they trade at 19 times. They've grown 1% over the past 4 years. Apple's grown 14% a year. So, you know, 19 times PE versus 13x cash, you know, Apple's growing, you know, call it 14 times faster, 14 versus 1%, you know, and the S&P's at 16 times. So any way you look at it, Apple's cheap. You know, Warren Buffett's in this stock for a reason. He sees this moat that they're creating, all these different services around their vast, you know, iPhone base that they have.
Really good analysis there, Brian. Great to have you. Thanks so much. Brian White joining us there.